Today's stocks fell into correction territory. What does that mean to you and your portfolio? And what are 2 trade ideas that you could use for the week to come?
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com.
Hello, I'm Christopher Uhl, and welcome back to the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com. I'm the 10-minute stock trader himself, Christopher Uhl, voted one of the top 100 people in finance for 2019. Now, the market was kind of crazy this week. Early in the week, stocks surged on the news that potentially we'd be having some deals with China, and by Friday, stocks were down nearly 500 points, which is kind of a big deal. So stocks fell on Friday, mainly because of concerns of global economic slowdown, which we've talked on this podcast before about. The Dow Jones fell nearly 500 points and is at its lowest level since May. For the year, the Dow is now down 2.5%. The S&P's dropped by nearly 2% today, and they are currently at their lowest level since April. And that's down 2.75% for the year. On Friday, this is the first time since March 2016 that all 3 major stock indexes were in correction territory, which is down more than 10% from their 52-week high. Now there's some other interesting news this week. $46 billion in funds were pulled out of mutual funds and ETFs, and that's the largest outflow on record ever. And does that mean that we're entering a bear market? Not necessarily. I just thought that was some pretty interesting data that retail and institutional investors are both pulling their funds out of the market right now, which, if you understand how markets work, is partially why markets have been going down, partially why markets are in correction territory. So what does that mean to you and your portfolio? Is it time to sell? Well, it really depends on your investment time horizon. For me, whenever I'm talking about an investment time horizon and I'm looking at my 401k, I'm not touching that thing, ever, for any reason. I mean, for example, you look at the stock market this week. Let's say you exited on Monday and you got back in today. Exiting on Monday when the stocks were going up and getting back in today when stocks were going down, that's a horrible trade. And if you're looking at a long-term time horizon, for me, the best thing to do is just never look at it. I mean, if you're talking about your 401k, every other Thursday, for me at least, I'm putting more funds into it. And with dollar cost averaging, over time, the portfolio should gain in value. And in all reality, a nice portfolio would be built to handle these kind of moves because it's going to be hedging it with some other type of assets. So now is definitely not the time for me that I'm looking to sell. But you know what? Everyone's got their own risk tolerances. And if you think that we're about to head into a bear market, we're already in a correction zone, maybe it is time for you to bail. But for me, in my trading account, I'm sitting on mostly cash because there's been a lot of volatility, especially in the short term. But in my long-term portfolio, I haven't touched anything at all. I'm continuing to fund it week after week. So real quick, I want to go to a chart and show you exactly what's going on and talk about the correction scenario that we're in. Okay, so what we're looking at here is the S&P 500. And we're looking at, let's change this up real quick to the 6-month 1-day chart. So every one of these candlesticks is 1 day, and we're looking at a 6-month period. And what you can see here on the far right, this was today's action, this big red down candlestick. Now, also I want to point out on this chart are 2 moving averages. One is the 13 and one is the 30. And by no means are they a predictor of anything, but they do show a trend. And that's what I'm trying to trade around whenever I'm putting on trades. Is I want to be part of the trend. I don't necessarily want to be getting in front of a moving train. And if you go check out the interview that I did with William Satry, the millionaire trading instructor, that's one thing that he really preached, is that if you're going to be trading, you want to be trading with the trend. There's a million different ways to set up trades, to trade with trends, and you may not be ready, especially if you have a smaller account, you may not be ready to be stepping in front of any type of trends. I mean, for me, I've learned very expensive lessons where I have decided, the market definitely didn't, I decided that this trend is ready to turn around. And I turned out to be wrong and paid a lot for it. So what I want to show you here on this trade here, or on this this chart here, is that both the 13 and the 30 are both pointing down. And they have been essentially since the middle of October. The 13 period moving average is currently below the 30. The 13, being a shorter moving average, is going to be more reactionary, whereas the 30, that's going to smooth things out over time. A moving average takes the average price over the number of periods that you've assigned, so 13 and 30, and then creates a line to show you which direction the trend is moving. So the reason I like these two is that whenever they cross, that is an indicator of things are changing. Or if they're moving in one direction, kind of like they are now, which is down, that gives you an indication that the current trend is down. So am I saying that things are going to keep falling apart? Not necessarily, but the trend lines are saying that the current momentum, the current direction is down. So let's go into the Tastyworks platform, and I'll present you with 2 trade ideas that you could either join in on this trend, or maybe you're ready for it to see a counter trend and you can trade the opposite direction. So let's take a look at SPY. That's the S&P 500 ETF, and the absolutely most liquid product on the marketplace, and one that is my personal go-to when I'm looking to trade because it is so liquid. Liquidity matters. And especially when you're trading options, there are times where a stock may trade 50 million units in a day, but the options may only trade a few thousand, and that's because there's not a liquid options market. So SPY, being one of the most liquid products in the world, or maybe the most liquid product in the world, there's always going to be somebody who's looking to buy what you're selling or sell what you're buying, and that's really important whenever you're trading. So let's take a look at the options chain in February. Now, whenever you're choosing a options trade, the optimal period of time to trade is at 45 days till entry. We don't have that right now. We've got 35 days and 63 days. 35 days is the limit that I will do whenever I'm looking to enter a trade. So I'm actually going to look out in February at 63 days, February 2019. And as I mentioned before, the 25 delta, that's my favorite delta to trade. And mainly because that gives us a 75% probability of profit. Now, let's say we sold the 274, 275 call spread, and I like this trade, and I'm going to show you why. So we went to the 25 delta, meaning we have a 75% probability of profit just right off the bat. The S&P 500, the SPY, has an implied volatility rank of 54, meaning options are expensive. They're more expensive than they are 54% of the time, which is a great time to sell premium. Now, looking at this trade here, we would be taking in 27 cents of credit, which I like that too. We're taking 25 deltas of risk, which would mean a 75% probability of profit, and getting paid 27 cents in credit. And if you remember before, in the podcast where I talk about balancing risk and reward, that's one of the things I look at. I like to see a delta value and a credit value be similar. I like to see them in line with each other, and they are in this case. So the Tastyworks platform shows us the probability of profit would be 73%. The probability of getting 50% of our max profit in the trade is 81%. And our max risk would only be $73. Now, I like this trade a lot. And this is my style of trading. I like to trade well out of the money credit spreads. The reason being is because I like to have high probabilities of profit. I like this trade because it's bearish to neutral. The stock can rise, S&P 500 can rise all the way to 274. And it's currently at 260. So we essentially have a $140 range in the S&P 500 between now and February. And I really like this trade the way that it's setting up. So if you're looking to go short, maybe this is a good trade setup for you. Selling the 274 call and buying the 275 call, taking in 27 cents of credit, having $73 in risk on the trade with a 73% probability of profit. Now let's say you want to go long and you want to sell a put spread, which is the exact opposite thing we're talking about. On the call side, we're talking about on the put side. So it would be selling the 25 delta put, which is a 245, and buying the 244 put. Now, by doing so, we take in a credit of 19 cents on the 25 delta. The reason being is that put spreads get cheaper because of skew, meaning that the further out of the money option that we are buying is more expensive relatively than the further out of the money option we're doing for the calls. And because of that, it eats into our potential profit. I don't like this one as much, because I like to see my delta and my credit value be similar in line. And this is not the case on this trade. But if you were wanting to go long, maybe this is a good option for you. Selling the 245 put and buying the 244 put. Now, as you know, none of this is trading advice. I'm just giving you some ideas. If you were to go long or were to go short, these are 2 potential options you could do. There's a myriad of ways that you could trade this. And with the Tastyworks platform, the reason I really love Tastyworks is that both of these trades would cost $1 per leg total. So either the call spread or the put spread, my total cost for commissions on the trade would be $2, which is pretty much nothing. And remember, I know I've said this before, but if you're looking to open a new options trading account, you definitely want to check out Tastyworks. They're the platform that I use and I recommend. And if you sign up with the new account using the code 10minute, that's 10MINUTE, I'll send you over $150 in free stuff from 10minutestocktrader.com. These are exclusive bonuses you get just for creating a free account at Tastyworks and letting me know. It doesn't get much easier than that. So that's everything I want to cover on today's podcast. We talked about the news for the week, we talked about a couple trades, and we talked about what's going on out in the marketplace and a few different ways that you could structure your short-term and long-term portfolio to take advantage of it all. Now, one thing I want to talk about today, who you were, who you are, and who you will be are three different people. So keep that in mind as you're going through your day. Who you were, who you are, and who you're going to be are three different people. Make sure that you are choosing a better life for yourself. Make sure the next minute, the next hour, the next day, you're living it to your fullest potential, making the best decisions you can, moving forward and moving on with your life, and letting things go. Letting things that were happening to the old person, happening to the current person, not affect, not bring down the person that you're going to be. Now that wraps up today's How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com. I've been your host, Christopher Uhl. Make sure to come back tomorrow for more tools, tips, and tricks to help you trade faster and trade smarter. And I'll see you on the next episode. Thank you so much for tuning into today's How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com. If you feel that I brought you any value at all, please consider showing your appreciation by becoming a supporter of this free podcast at anchor.fm/Christopher-Uhl/support. This allows me to be able to create more content to give you the tools, tips, and tricks you need to help you trade faster and trade smarter. Our mission statement at 10MinuteStockTrader.com is to empower others to employ the strategic advantages of options trading and to provide confidence that they can profit in any market scenario. Please be sure to give me a like and a comment below and tell me how you can use this in your own portfolio. I have so much more content just like this over at 10MinuteStockTrader.com. There you'll find all the bullish, bearish, and neutral strategies I trade, as well as everything I've traded in my portfolio over the last year. Thank you so much for sharing your time with me. It really does mean the absolute world to me that I've become a part of your day. I've been your host, Christopher Uhl, and thanks for stopping by.
Now that wraps up today's How to Trade Stocks and Options podcast. I've been your host, Christopher Uhl, and thanks for stopping by.
10MinuteStockTrader.com content is for information and educational purposes only. It is not, nor is it intended to be trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10MinuteStockTrader.com and Christopher Uhl, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10MinuteStockTrader.com and Christopher Uhl are not in the business of transacting security trades, nor does it direct client commodity accounts or give commodity trading advice tailored to any particular client's situation or investment objectives. 10MinuteStockTrader.com and Christopher Uhl are not licensed financial advisors, registered investment advisors, or registered broker-dealer. Stocks, options, futures options, and any instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment trading decisions and for evaluating the merits and risk associated with the use of any financial security and brokerage platform. For more information, please visit 10MinuteStockTrader.com/legal.
And thanks for stopping by.